Yes, thank you.
Thank you. Thank you very much.
Thank you. I assume that actually wasn't for me. Anyway, good afternoon. It's fantastic to be back with you. I hope you've had a great morning. It's great that the air conditioning is back on in this auditorium. Thank you to technicians for sorting that out. Have you had a good conference so far? Yeah. Okay. Have you built new relationships? Yeah. Okay. Are you going home inspired? Yeah. Fantastic. This afternoon's session, I think, is going to be a really, really interesting one. And perhaps you could say it kind of cuts to the heart of some of the big debates going on in the social enterprise and social business sectors right now. Obviously, we've seen the emergence, a significant emergence of lots of chatter around impact investing, social investment, how we capitalise the growth and the scaling up of social enterprises. I suppose one of the fundamental questions that we have to ask is it okay for investors, private investors, to profit from our work? And if so, and that's a big question, how much should they profit? We'll all be familiar, I guess, with some of the work of the French economist Thomas Piketty, which really suggests that as investors continue to get more return on their capital than the people actually working in jobs, inequality can only ever increase. The relationship between capital and social enterprise is critical. I think we all recognise that. And we all need to find capital to grow our businesses. But what sorts of terms should we accept? I've got a very good friend in the audience somewhere who told me that, potentially investment can motivate a degree of, can undermine bravery and boldness. It can lead to conformity. Is that a risk that we face? Well, as you can see, we've been joined on the stage by two fantastic people, one of whom is very, very familiar to you, Professor Mohammed Yunus, Nobel Laureate, and of course Sophi Tranchell, some of you may have seen in earlier sessions. Sophi runs an incredible organisation. It's got a share ownership structure, but the farmers own, in Ghana, 45% of the company. I won't say any more about it because Sophie's going to first of all present and tell you about the model that has been developed with Divine Chocolate. And then secondly, we're going to open up into a conversation about the role of profit, the role of investment, and how we can navigate these potentially tricky waters. So first of all, I'm going to ask Sophi to take the podium and tell us all about Divine.
It's great to be here. It's an honour to share the stage with Mohammed Yunus. When I went home and said I was going to be speaking here, my son remembered a project he did when he was 12, and so he was really chuffed I was coming to speak. And when I said I was going to speak against him, he said it was a really bad idea and I should turn it down. It's also great to be here because I came and spoke at the first Social Enterprise World Forum in Edinburgh in 2008. And it's been fantastic to see how far we've all come, how far social enterprise has come. In 2008, people didn't really know what we were talking about. Now people all over the world know what we're talking about. And I think that our social enterprises have become more dynamic, more stronger, and have delivered more impact. So it's really great to be here today with you. So I've been set the question of should investors profit from social enterprise? And I'm going to say it sort of depends who the investors are. And so in Divine Chocolate, as Peter said, Kwapa Cocoa, the farmers' cooperative in Ghana, own 44% of the company. And really it's the whole reason why we've set up is so that they could get a share of that profit. So I want to tell you a little bit about the company. Sorry, what do I do? Yeah, there we go. Okay, so Divine's story is the amazing story of cocoa farmers who voted to set up their own chocolate company. That's Beatrice Ashanti. She's standing at her cocoa table in Ghana, which is in West Africa. So their story started back in 1993, long before I was involved, and it was a result of the liberalisation. So it meant that the liberalisation of the Ghana cocoa market meant that farmers could set up an organisation run by farmers for farmers. So a charismatic farmer saw the opportunity and set up Kwapa Cocoa, which means good cocoa farmer in Twi, which is their local language. And they started on fair trade principles, and they were democratic from the village level. So they started with 2,000 members in 22 villages. They very quickly developed a reputation for being honest and efficient, because the first thing they did was buy weighing scales so farmers could trust the transaction. They also carried around a 25-kilo weighing stone, so you could ask to have the scales checked. This meant that they became very popular very quickly, and they now have 80,000 members in 1,257 villages across the cocoa growing belt in Ghana. They have also had quotas for women all since they began, and it means of those 80,000 members, 35% are women, and they have women at all levels through the organisation. In 2006, they elected more women than men onto their national executive, and in 2010, they voted for their first woman president. So they were the first people to export fair trade cocoa from Ghana, and in their AGM in 1998, where 2 people from each village go, so a woman can go from every village, they voted to set up their own chocolate company, and Divine Chocolate was born. We picked a structure which is a limited company owned by shareholders because we wanted the farmers to be higher up the supply chain. So our mission is to improve the livelihoods of small-scale cocoa farmers in West Africa by establishing a dynamic branded fair trade chocolate marketing company in the very large and valuable UK chocolate market, thus putting farmers higher up the value chain. Just to clarify things, this is what I think a social enterprise is. So I think a social enterprise is a business driven by a social mission. The mission is at the heart of what we do. It gives us our reason to be. It makes us good at what we do. Despite the fact that we've only been making chocolate for 15 years, we know more about it than quite a lot of the big players. It gives us our competitive edge. People are interested in the fact that that's what our mission is. And I think it defines where the money comes from, and it certainly defines where the money should be going. So just so that you know the sort of market we've entered, so when people say, well, social enterprise will never be able to deal with the sort of really big pieces of market structures that there are, the world chocolate market is worth $107 billion. So this is not chicken fry. And we want the farmers to have a share of that. The cocoa market is much less valuable, so you can see that the value is in the finished products that are being sold in northern markets rather than the traded commodity, which is very volatile and which farmers possibly don't earn what their fathers before them earned. So we want to take this model and we want to prove that you can use this model and we can do business for good. So I wanted to tell you a little bit about the investors in Divine, because it matters who those investors are. And so the question it matters who they are, because otherwise they will distort your mission. So the investors behind Divine, and they were all enlightened organisations, and they were all organisations, are Twin Trading, who originally worked with coffee farmers and set up Cafe Direct, which is a fair trade coffee company in the UK. They then carried on working with smallholders and recognised that cocoa farmers would be a good people to work with. So they continue to work with the cocoa farmers from 1993 till today. The Body Shop International also invested in Divine because they thought it was a fantastic idea to have an organisation that was going to be owned by farmers. And then later, when we wanted to raise money for America, Oiko Credit, which is a Dutch social finance company, came in. And they also are absolutely committed to poverty alleviation. Their main business is microfinance in developing countries, and they've got desks in 60 countries. They've also offered our farmers soft currency loans at very competitive rates, and so it's been very interesting, that partnership. We also have some NGOs in the UK who have supported us, which is Christian Aid and Comic Relief. And interestingly, our Department for International Development did a fantastic piece of support, which was a loan guarantee when we started, and it meant that people really took us seriously. So they guaranteed a loan for £400,000. It meant that we could develop a relationship with a conventional bank and access conventional business tools at competitive rates. Things like invoice discounting and foreign exchange forward currency buying. I wanted to go a little bit further with the Body Shop and Gordon Roddick particularly, because he's one of those investors that's actually behind quite a lot of the social enterprises in the UK that have been a success. And so he has actually got a fantastic hit record in picking those really unfeasible startups that actually did work. And so not only is he invested in Divine, he invested in the big issue before us, he's invested in Baloo, who you've heard from today, and he's invested in things like the wind-up radio. And so he's the perfect example of the sort of investor that you want to get. He's obviously entrepreneurial, he saw it as a business opportunity, but he's visionary in that he saw what the benefit would be of farmers owning the company. But once we actually cracked it, which was in 2007, and Body Shop got bought by L'Oreal, they donated their shares to the farmers, and that's why they're no longer a shareholder in Divine. But I did want to put up this quote from him, because he said that from the beginning it was a very personal involvement for both Anita and myself. The fact that the primary producers had substantial part of the equity was a brave, imaginative decision. Instinctively, it seemed right, and the fantastic growth and development of Divine against all the odds has shown that by working in cooperation to a truly mutual end, the achievements can be quite remarkable. Whilst all trading relationships are unique, there are several facets of this relationship that should be taken up and used by other companies and governments, resulting in better balance of power in trading relationships. So he really gets why he invested in us, and he clearly wasn't going to distort our mission. So Divine delivers 4 income streams for farmers. We pay a guaranteed fair trade price for all of the ingredients that we buy. On cocoa, we pay $200 a tonne social premium, which they get for every tonne of cocoa we buy, and they get to decide how that money's spent. And that's the important thing about fair trade, is the farmers decide how the money's spent. On top of that, we dedicate 2% of our turnover, that's not 2% of our bottom line, that's 2% of our top line, to producer support and development programs, recognizing that if you're going to work with people in remote and rural Ghana, where there is really high levels of illiteracy, all sorts of problems can happen. And so you need to help them work to build their business and to deal with the problems that occur as they occur. And then also they get a share of the profit. So since we've been working, we've now turned over more than £100 million. It means we've invested more than 2 million in producer support and development. And Kwapa Cocoa has had 200,000 in profit distribution. So why this structure works? It works because we were about delivering more of the value of our products to the farmers. That's what we were trying to do, because there was a limit to how far they could go by just selling cocoa. It works because the shareholders we have had are not tourists. They're not in it for personal gain. They are institutions with missions. And the returns that they want are more than money. They have been demanding and interested and curious to see what things work and how we are improving the livelihoods of the cocoa farmers that are our owners, and how they are building a good and significant business that will be there in the future. Having shareholders, I also think, is quite interesting, because it does give you a real discipline. It means that I have a board meeting every quarter, and I've had it since the beginning, where my board has 12 people on it. So when I only had 4 employees, I had 12 people to be accountable to. And it means that they call you to account, and you have to run your business in a disciplined and business-like manner. And I think that has been a good discipline for us in Divine. I think there is a downside, though, if you did take conventional money. So I quite often say, when I'm in different forums, that the best things I've done is the money I've turned down. The deals I haven't done have been as important as the deals I have done. Because we heard quite a bit today about partnership, and you can pick the wrong partners, and they can sink you. And you can take the wrong investors, and they'll take you on a journey you never wanted to go on. And so I think you need to make sure that they're not going to make you compromise your mission. But I do think that Divine has proved that as a company limited by shares, we're proving that business can be done radically differently and in using the existing structures. So the questions I was going to end with is, I was going to remind you that actually ownership's about a lot more than money. And so the subtext of the question was about ownership too. And so ownership is about knowledge and power and control. And so I think we've heard quite a lot today about some very lovely things that are happening, but a lot of them are really on a model that's quite conventional charity, i.e. you're doing good things for people, to people, Whereas what Divine is about is that the farmers are empowered by this relationship. They sit on our board. They're not my farmers, I'm their employee. They call me to account and they can sack me. And I think that really changes the power relationship and how we talk about each other and how we respect each other. I think there is a challenge if we want social enterprises to scale up. And I think we need to make sure that those social investors that are coming in don't compromise our mission. I feel as if we're really needing to... Sorry, let me check where I'm going. I'm slightly lost here. I think there is a question of, do the increasing amount of social investors really share our mission? I think you need to not kid yourself about this. If they don't share your mission, don't take their money, because at some point you'll part ways. I'm interested in, can we put some kind of framework in place that will protect our missions and values so that they are not changeable? And I'm not sure we've quite got to the right legal structures. I think the CIC in the UK is a good way of profit capping and asset locking, but I think that sense of what is your mission and are you delivering on it and are you letting people compromise that is something that we need to look at. But I think that one of the reasons we set up Divine was to be a catalyst for change in the way that business is done. And we've done that in fair trade in terms of all of the major chocolate companies in the UK now have significant brands that are fair trade. 21% of all chocolate in Britain sold last year carried the fair trade mark, and I think that was unthinkable 15 years ago. And so I do hope that by running a for-profit business, but not doing it for profit at any cost and putting people before profit, I hope that we will see the end of a profit-maximising culture being culturally acceptable, being what we expect to pay our mortgages and our pensions. We're all complicit if that's how we're running the economy. And I think we need to get to the point where that's no longer acceptable and that profits are capped and where those profits go are really clear. Thank you very much.
Right, thank you very much. I think that's a really, really interesting model. Sophie, are there any restrictions on how shares can be traded within Divine? So could the cocoa farmers themselves just decide to sell out, cash in?
So the cocoa farmers could decide to sell out and cash in. And I must admit, I hope by saying it out loud it doesn't happen tomorrow. But they do. But the shareholder agreement means that the other shareholders have to agree. And so in a way, there's checks and balances in our system because of the fact that the other shareholders are also mission-driven institutions. Okay, I'm going to come to you, Professor. You know, you've said it 100 times, often in my presence, that for-dividend businesses cannot be social businesses. You've got a radio mic on, don't forget.
Oh, I see.
Modern technology and all that. You're like Madonna. Yeah. How does that model work for you?
Well, in my case, I was describing what I do, which is a non-dividend company focused on solving problems, social problems. So that's one particular category. If you look at the whole spectrum of business world, you can almost see on one end, 100% profit, nothing else. And then if you can move from that part, say 99% profit to 1% social, and keep moving, 50% profit, 50% social, and 99% social, 1% profit. So you have a whole spectrum. Where you draw a line for yourself is up to you. It's not something that one can push you to do that, because these are sometimes very difficult to identify. When I say 5% social, 95% profit, and so on, business doesn't run in a smooth way. Sometimes it goes down, sometimes it goes up, sometimes there is no profit at all. But should you call it then 100% social? No, because his motive was to make profit, but he couldn't make a profit. Amazon doesn't make profit. That doesn't make it a social. So some year you make big profit, some year you make less profit. Some year you do lots of social, some year you may not do lots of social. So those kind of things. So how to draw a line? That's once you are in a kind of definition part, you have to be something that you can distinguish one from the other. If you're going to distinguish quickly, then definition is not very good. So you have to have something that you can distinguish quickly, that it is social, it is profit, and so on and so forth. That's why I'm not saying this is bad to mix social and profit. It's something, you do it out of your own dedication and commitment, it's fine. But the moment you start saying that these are the categories which are social and not social, or profit maximizers and so on, the risk is somebody will take advantage of the looseness of the definition. We had problems, I've suffered through it, microcredit. And I thought microcredit is a very clear kind of concept, that you lend money to the poor people so that they can overcome their problems. But gradually I saw that people, smart people, coming with many smart ideas, using microcredit to make a lot of money for themselves rather than helping people. And we have extreme cases where we had to shout, scream, and condemn those exercises, saying that the microcredit has been abused because in the beginning we didn't take care to sharpen a definition. So in the process, people start jumping in, calling themselves microcredit. To the extent, even loan sharks starting calling their program as microcredit. I said, my God, this is not what we wanted. We were fighting the loan sharks. We are not here to tell them that they are in the category of microcredit. Payday lenders started calling them microcredit because they give small loans. Because this is the only criteria, the small loan, then everybody jumps in. So because we didn't have a beautiful boundary, well-defined and so on, we can do that. So now, as a kind of last resort, after all these bad things happen, we keep saying that there is a right microcredit versus wrong microcredit. Again, it's a very loose way of explaining. Or sometimes we say social microcredit versus commercial microcredit, so that at least people have a hang of it, what kind of thing it is. So that's the risk I'm talking about. It's not that people are not dedicated, committed to do things. Always think about other people who will take advantage of the way you're saying. Then suddenly you see next to you who is being recognized as a social enterprise, you are shocked that person or that company is being recognized as social enterprise because of the way you define yourself as a social enterprise. So these are the risks. Otherwise, where you want to put, this is up to you to decide in the spectrum how you continue with that. But for us, we try to tighten this whole thing for our own discipline. This is a non-dividend company, so question of personal profit taking doesn't exist. You get your profit, your investment back through the initial profits that the company makes. And after you got your investment money back, you close the door. After that, you do not take any profit out of the company at all. It's all profits are plowed back into the system. So it's very clear. You can look at the book, accounts, and so on. You can identify it. You can say it is or it is not, and so on. All said and done about profit maximization, that is not going to disappear very soon because of the way the system has been developed. For example, you see the whole thing is in the stock market. The stock market is only one indicator, nothing else. How much money you made. That's all they care about. Your stock price. Is the stock price going up? The stock price going down. That's all they care about. They don't care how much social you did, how much something you could want to do, and so on and so on. That measurement doesn't enter in the stock market. As long as stock market remains one indicator phenomenon, and that's how businesses are evaluated, investments are made, and all those things are done. Profit maximization continues to roar, continues to flourish, because that's how you created a system where recognition is done on the basis of the profit you make. Unless you change the measurement criteria, you cannot change the system. So we are talking about profit and other issues like a planet and the people. If we can create business on the basis of 3 Ps instead of 1 P, which is profit P. So instead of profit P, you say your profit P and the planet P and the people P. Then companies have to be responsible for on 3 grounds, and they have to produce 3 reports, 3 annual reports on each one of them. Then the stock market has to show 3 indicators and the combined indicators for them all. Then you start making a change.
So, Professor, so what do you say to these leading global chief executives of these huge multinationals, you know, the Unilevers of this world, Diageo, Ben & Jerry's, that say we are working in that way, we are moving in that direction, but we are still beholden, ultimately, to our shareholders?
Sure. They are the leaders of a new generation. There are leaders. But that's not mainstream. They're good. We applaud. We applaud Divine Chocolate. So we applaud them. This is something has to be done. But in order to get more strength in it, arguing that the more sharpened we can make the definitions of it, the more protected you will be. Your job is okay. But the problem is the fake one which will jump in. That's the problem. Then when the fake one gets jump in, then your validity is completely ruined. You don't know what it is anymore.
Sophi,
that's the risk.
Sophie, I'm going to ask you about the experience with fair trade, because when Divine kind of broke into the market, it was the UK's only fair trade chocolate bar, and people lapped it up. And now, of course, if you go into a UK supermarket, you'll see big companies like Cadbury's, who are owned by Kraft, who have now changed their name, and other companies like Mars that are wearing the fair trade badge. Do you think that there is a risk that consumers are actually being confused by all of these messages that these businesses are fundamentally for good?
I think
Oops.
Is it on? Let's have a look. Yes, it's on.
I think consumers could be confused by that, but in terms of what Divine set out to do, we set out to change the way the chocolate industry worked, and we wanted big companies to pay more for the ingredients that they buy from farmers and to have long-term proper relationships with farmers. And so the fact that those big companies have converted significant product ranges to fair trade is exactly what we wanted to see happen. But you've got to be careful what you wish for as a social enterprise, because it's made doing business since 2009, when Cadbury's announced the conversion of Cadbury's Dairy Milk, much more difficult for us, because we aren't now the only fair trade chocolate that people can buy when they want to buy fair trade. So I do think you've got to be careful what you wish for, and in a way, all of us who are dealing with complicated social problems and market failures need to see a time when our companies won't need to be there. You know, we need to try and solve the problem. So if companies pay more for the cocoa and the farmers do better, then in the end that might not be good for Divine, but it's definitely good for cocoa farmers, which was our mission in the first place. I did just want to say a little bit about the money thing, because what struck me about watching the financial crisis and also seeing the issue in terms of microfinance is that people have got confused between the money that is paying their wages and the money that they're earning versus the product that they're selling. So that if we had done the equivalent in Divine to the banking industry, I would have burst, because I would have eaten all the chocolate. And so that sense that when you're talking about money and you're creating a different financial product to work in a different financial market, I think as social entrepreneurs, we need to be more demanding of the social financiers. We need to expect them to put their money where their mouth is, just like we've put our money and time where our mouth is. And I think we need to do that. We need to say it's not actually reasonable that you're making more money out of this than everybody else. And I think it's down to us to set the bar.
Good, okay. We've got about half an hour left, and I want you to kind of be involved in this conversation, because it's going to be you that determine how your businesses are structured, how they're already structured, and how you might take things in the future. So has anyone got any thoughts? I know that I've been in some sessions where people have talked about, as a social enterprise, they're talking about their exit strategy, the fact that they want to kind of set up a business, do some good, sell it, make loads of money and retire. Is that part of this movement? Is the person that said that even in the room? Would they be willing to admit it if they were? Do we have any thoughts on the role of investment and returns and profit? You're a quiet crowd. You started off so lively. Well, I'm gonna throw some thoughts in myself then, because it does seem as if we are desperate for capital in order to grow our businesses. In the UK, consistently, year after year, when we ask our social enterprises, what's limiting you extending your impact, they say access to capital. And given that so much capital is now in private hands, and so many governments are so indebted, where does that capital come from, Professor? Where might it come from?
From us, from the people. That's what they decide. Usual sources are known. The conventional sources of capital are dedicated to conventional businesses to make money. So that's how the financial institutions are built, so that you can make money. Because banking is also a business. They want to maximize their profit. So they want to go where the maximum profit is. And they see those big ones more secure for them, so that they don't lose their money. They have lots of collateral. They can get the money back on the basis of that collateral and so on. So that's the traditional way they do it. If we want money for social purposes, social enterprise purposes, social business purposes, we have to create our own fund sources ourselves. They're not going to open it for us unless government makes legislation saying that X amount of money must be invested in social enterprises. Like in India, for example, there's a law, national law. A certain percentage of their investment has to be invested among the what they call priority sector, among the poor people, disadvantaged people. So that money has to be invested in that in order to get the regulatory compliances done. So this is a kind of order from the government that this is what you have to do. So this is one. And then they fix the interest rate for that. Not only you have to invest in that, you cannot charge more than 4% interest rate on that, where the market rate probably is 10% and something like that. So this is a kind of compulsion authority from the government side. People, representatives come up with that. So you have that option, political action program. That political action goes into making that happen. But unfortunately, it's very difficult to get that political action mobilized because politics is also controlled by the money. So their power of manipulating is much more strong than power of the people from other side who are not organized, who are not very well connected with the decision makers at the top and so on. So this is one way. Other way is building up your clientele or your friendship circles who can mobilize this money and make it happen. Those are weak attempts, but it works as a beginning, like crowdfunding, for example, is one option, that people put a small amount of money to get it, invested in a bigger project, accumulate them. Each one is putting a small amount, but together, large number of people putting a small amount becomes big amount. That's one option. Other kind of issuing bonds for that particular purpose, making clear this is a bond doing this kind of thing. So those kind of instruments, make use of the existing system, but you can come out with the new system also to mobilize those kind of funds. The traditional funds will not immediately open their doors to do that unless they are forced into doing that.
What do you both think about the role of foundations and big institutions that also have a social mission? Think about the churches, for example, the big foundations in Italy that are worth tens of billions of euros. Do they have a role to really stimulate and invest in the growth of this new economy?
Well, it goes without saying. I mean, this is where the foundations are created to look at the social issues and address the social issues. There is no profit motive into it. But one of the problems that they come up with, the foundations come up with, say law doesn't allow us to invest money into anything which earns profit. So we cannot do that. We can do charity. Under our law, we can give away our money, but we cannot invest in something which is almost have the same objective, but it makes profit. So we cannot use that. So law becomes a barrier. So you have to go back to change the law, if the law is the barrier in that case. If law is not a barrier, then we have to persuade that this is a better option for you, that investing in social enterprises, social businesses, rather than just give away money as charity.
Sophie, any thoughts?
Yeah, no, I think foundations and charitable churches and things could be really catalytic. I am interested in when they say that there's a legal reason they can't do it. It's actually about where there's a will, there's a way. So when Divine set up 16 years ago, Christian Aid were told they couldn't invest in Divine, so they put the money in through one of the other shareholders, and then it converted into shares when the law changed so that they could invest in Divine. And so I think those big institutions also have a role to play in challenging the rules and challenging the laws and changing the laws. But I also think they are people who can lead the way in terms of telling other investors what they should be doing. So I think the whole thing to do with the fact that things like our mortgages and our pensions are all tied up with investment funds that are earning money out of things that we'd be shocked by and horrified by. If they have a role in engaging with those institutions to say, actually, that's not, people, not everybody's going to accept those things. And sort of what fair trade has demonstrated in Britain is there is a grassroots concern about the people who grow the raw ingredients. And I think that sort of building up that grassroots, people actually asking, where's the money from? Where's it coming from? And don't accept, a rate of return at any... All the big companies use profit maximisation and shareholder value as an excuse to do unmentionable things. And I think we actually need to say, as shareholders, which we are sort of in sequence, we should require them not to do those things and say that we're not wanting profit at any cost.
So often it's just a complete lack of transparency. There is this complete obfuscation of actually what's happening with our money and our tax money and all sorts of money in the system. Do you think transparency is, could be a catalytic new kind of thing that could really motor the movement of responsible capitalism, social business, social enterprise forwards?
Ultimately, whatever people want, that has to happen. There's no option to it. How strongly they want, that's the whole thing. We want, but we have not mobilized our desire in a kind of political fashion to impact on the decision-making process. Because politics is not involved in it. See, we are doing it, but the political party convention, they don't talk about it. So it's not in the political process. For example, if you talk about social enterprise or social business, these have not translated themselves into political issues. People have not been asked for given choices, whether you vote for somebody who is in favor of social enterprise or vote for somebody who is against it. Those kind of things didn't come. So they are not debating within the political party whether our party manifesto should include that. Party manifesto doesn't include that. So even if it says it in such a diluted words that you really don't know what they're talking about. They can do anything they want given that formulation in their policy statements and so on. So that's one. The people's will has to be reflected in the political process itself. And that has to be strong enough to impact on the political parties. So the political parties take it very seriously. Unless we have a very clear position on this, people are not going to vote for us. Then they take it very seriously.
Okay, we've got some questions. Thank you for thinking through the issues and coming up with your questions. Got a lady at the back there in your purple jumper. Would you like to, can we run a mic up to her, please, on the back of the first tier? Run, please. Thank you. And then I'm going to take a question from you, and then from you. So I'll take all three questions and let the panel respond. Could you give us your name and which country you're from?
Yes, my name's Tess Kingham. I'm from the United Kingdom, and I'm a former Member of Parliament in Britain, actually. So I wanted to follow up. This is something that's been in my mind all the way through this conference, really. I'm involved in a community CIC, but there's so many people here. There's such a lobbying power in this room for people representing different communities. But do you think there's a role for us to actually sort of take some of the common themes that we're all operating on and lobby together as a movement in conjunction with something like the Social Economic World Forum to ensure that we've got a greater voice with legislators and decision makers? Because personally, from the point of view of being lobbied frequently, I think the power in this room could be enormous, and I think we ought to be using it a bit better.
It's a great point, and we'll respond to it. And I'd also like to personally respond to that too, Tess. Down here, we've got another question. If someone could run the mic. Thank you.
Thank you. I'm Sofia Marudi. I work for ActionAid in Italy. I also wanted to touch on the politics issue. You mentioned politics. I wanted to understand how you engage or do not engage with policymakers on the issues that you're trying to solve through social enterprise to be able to scale it up more.
Okay, thank you. And then lastly, we're going to take this question. So I hope you've got good memories and you can remember some of these points.
Yeah. Luisa Balbi from the European Bank for Reconstruction and Development. I have to be sincere, I'm not very thrilled about what I heard about the fact that we have to basically to force, this is the word that was used, to force to do the investment in social enterprises. It feels a little bit like a tax, if I have to be sincere. And second, it clashes a little bit with the idea that social enterprises use the market to meet social needs. So, and my question would be more, so how then to create incentives for the banking sector and the financial sector to invest in social enterprises?
Thank you. 3 really good questions. I'd like to personally answer all 3 of them, but unfortunately I'm your moderator, so I don't have that privilege, but I might take the opportunity and respond if we've got time. I'm going to start, Sophie, with you perhaps. You can pick and choose out of those 3 questions, or you can answer all 3.
Okay, so on lobbying, I think it would be great that we lobbied. Obviously, effective lobbies need to be really focused about what they're actually asking for. And so if we're asking that the Company Law Act changes so there is more company transparency and accountability on how they spend their money and how they earn their money, then let's put it around that. I think there is a campaign for that, and I think it would be really good to join it. In terms of advocacy, certainly we've spent a lot of time, and the reason we come to events like this is to demonstrate that there is a different way of doing business. And so we've done quite a lot of work with government to show them that you can do business differently, but also that you can support international development differently, and that empowering farmers is as important as giving them money. I think in terms of tax incentives, financial incentives, that's very interesting too. But as you'll see, Divine is a company limited by shares. We're using a conventional limited company. And I don't think that people should have a tax incentive to invest in a company which ultimately might make them loads of profit. I think that if you're in a CIC, which is asset locked and profit capped, then the idea of giving people tax incentives to invest in it, in the same way that in the UK AIM market, if you invest for more than 18 months in order to create stability, then you get a tax incentive. I think it would be a really good thing to look at. But it would depend which horse for which course, which sector you're in.
Okay. Professor?
On the lobby part, yes, this of course always helps. But before we lobby, we have to make sure what we are lobbying for. Do we have a common voice? Because it looks like we have common voice, but the moment we want to put it on paper so that they can make use of it, the government has a policy angle to it, we have to be much more precise than that we talk. So that in order to make that precision, we need a lot of time to agree on the focus of what we are trying to say, so that we don't say something which is a meaningless. Government or whoever who is lobbying says, oh, it doesn't make sense. What is it really you want? So we can answer that question. This is what we want, precisely. This is where you have to replace this, you have to delete this, you have to include this, that kind of thing. Very sharply defined things has to be done. So lobby needs sharpening of the issue itself. That's a very important thing. Lobby is one done by arguments. That's why lobby, and also by the popular support. These are the 2 forces behind the lobbying. There's a third force, which I feel very important, demonstration. Do it. That show that it can be done. Show that it is much better than any other policy that you have. Then, even if you are not arguing very well, by showing evidence that, look, this is the way it works. If you do this, more of this will happen. Otherwise, it will not happen. Then it becomes very powerful. So action is very important on the ground, which you are doing, many of you here who are present, and make it presentable as a case to the policymakers, that if you kind of open up the gate for such and such, this kind of thing can happen more and more. Then they see it more compelling to accept that. So this is the kind of lobbying path that we have to do by arguments, by precisions, and by demonstrations on the ground. the actions on the ground that you have already created. And on the side of the legal issues, how you make laws, for example, we have been talking about creating a separate law to create bank for the poor, because the existing law for the bank is to create a bank for the rich. It cannot work for the poor. So why don't we create a law which will work for the poor only? So exclusively dedicated to that, so that we don't wait for bank for the rich to open their door for the serve the poor. So these are the kind of legal inclusion that you have to make, and the politics becomes very important to it. How do we formulate it for them? Because politicians are not familiar with what's going on the ground unless we go and explain to them and give them the angle by which they can do that. So politics has to be included in that manner. And the one about the incentive versus the forced, yes, there are some forced, like tax is a forced. This is not incentive. But when you ask, when you create a law, if you create a foundation, in the USA, for example, 501c3, you get tax benefits. If you, whatever money you put into that foundation, that money will not be taxed. So there's an incentive. I save a lot of money, and I created my own foundation, actually with the public money. They didn't have to give it. They have just freed that money to be put in here. So that's an incentive to go into it. So there's tax is a force, but the incentive is to release that money for purpose of creating something good. In India, again, a very interesting case recently. The government has made a law that every company in India, operating in India, has to pay 2% of this profit as CSR. So they fixed it. It's almost like a tax. But tax which is not collected by the government, tax which is imposed on you so that you can use this money for things that it's specified what kind of use you'll make. They leave it to your decision, but they have not left you any option in not paying that, because auditors have to report that you have, this company has put 2% of that money into that. So 2% of that money turns into billions of dollars in India. So now suddenly you have a case. What do you do with this several $billion which is coming out from the CSR money? So this is a compulsion by the executives of the country. They decided that has to be done. So there are ways where you use the incentive door, where you use the compulsion door, depending on your situation, your political strength, you apply those things.
Thanks. I can see that we've got a couple more questions. We've got about 10 minutes left, so keep your questions, please, succinct. Yes, sir.
Professor Yunus, my name is Peter Lee from Taiwan. From the point of view as a social entrepreneur, because we are trying to put our effort in social business, but because as you say, to keep the social enterprise as a pure function in social dedication, but as a new generation for who lack of resource and we don't have good financial support, but we really want to dedicate ourselves into social business. But since you have a very high standard for the social business, so to the young generation who want to dedicate ourselves into this, it seems quite challenging. So do you have any advice to the young generation? Thank you.
Yeah, well, we had touched upon some of these issues where this money will come from for social business. One, the attraction of social business in comparison with charity. So people who are used to charity, give them an option. You can take this money, use it for social business. You get the same thing done, but money comes back. And then you can reuse the money to do more. So that's, if you can persuade, you can demonstrate. As I said, demonstration is a very powerful tool. If you can demonstrate, then that money, charity money, will be available more and more. In the beginning, it will be case of 5%, 10% of the charity money. But if you can demonstrate, after all, people who are running charities, charity funds, they have their own problem too. Their problem is where to use this money. This is a big problem for them. If you look at a big one, like Bill and Melinda Gates Foundation, they have to literally give away more than $1 billion a year. Otherwise, they will be liable to government for keeping their status. And $1 billion a year to find ways where to put this money to go is quite a hassle, because you don't want to waste your money. So that's one. Not everybody has $1 billion to give away. Somebody has $1 million to give away. And there are many who has $1 million to give away every year. What do you do with that? So this is one track that you can come up with. The other one is initially that crowdfunding that we are talking about is one. CSR money, foundation money, and those kind of things. This is an easy way. Gradually, the serious money will also flow into it out of its own necessity, because each company will be held more and more responsible in future for the bad things they're doing. For example, waste they create. Each company creates lots of waste. Then social business company can come forward, say, we will manage your waste, recycle it, here is the contract. And they say, wow, this is good. I will sign up the contract, you manage our waste. That's good. So this is one way to do that. Energy is a good case for social business. It's a business, so it's investment. Drawing attention, drawing investment shouldn't be as difficult as drawing charity. This is something that you can return. You give the money back. So this is one advantage of that. So this is, I think, is an important part of it. Yeah.
Perfect. Okay, I'm going to take 3 quick questions. We've got about 10 minutes left, and I've seen 3 speakers. So first of all, I'm going to start with Sydney from British Council in Ghana. We can grab a mic down there. And then I'm coming to that gentleman. And then I did promise someone over there. Okay, I'm coming to you next. So those 3 questions, and I think we'll be done. So Sydney.
Thank you. Quick question is, are we not necessarily taking all the responsibility away from governments who, by their structure themselves, take taxes and are supposed to be a socially focused entity?
Good question.
And taking it to private sector and all of the other investments we find?
It's a good question. The second one was, keep your hand up, please. Hand up so they can find you. Tell us who you are, please.
Yes, hello. My name is Francis. I'm from Brazil. I have a totally different question of the other persons.
Hopefully it's short.
Yes, okay. I work at SEBRAE. I think Yunus knows SEBRAE. It's an enterprise foundation, something like this, an organization with 7,000 people working, and we attend small and little enterprises in Brazil. And one of the things I have to think, what we at SEBRAE will consider being social enterprises. And for me, I was also at the forum in Rio in 2012, and I think in Rio, it was clear for me that most of people don't really define what's a social enterprise. And Yunus, Professor Yunus, started this year in Brazil with ESPM, a university, a private university in Brazil, a course to teach for students which would be social enterprises.
Yeah. Your question?
My question, I had
Please,
to get
politely.
context. My question is, how do you teach and what do you teach to these students of post-graduation which are social enterprises?
Great, thank you. And then for the final question, the gentleman there, he's already got a microphone. Great.
Allora.
Tell us who you are, please.
Sono Fortune Kutsumambulu dalla...
Can we have the volume up, please?
Funziona? Ok. Fortune Kutsumambulu dalla Repubblica Democratica del Congo e dall'Italia. Quindi parlo
Hang on, just one
italiano.
second.
Okay.
This could take slightly longer than I had hoped, but you've got one. Okay. Sorry, apologies. We're dreadfully non-multilingual here.
La mia domanda segue quello del signore del Brasile, quindi va sul concetto dell'impresa sociale. Si è parlato anche qui del lobbying, no? Che bisogna fare presso i governi. La domanda al professore: non pensa che legare la questione dell'imprenditoria sociale alla situazione dei poveri, quindi legare questo tipo di concetto alla questione di povertà, non freni appunto lo sviluppo del dibattito politico, perché per i politici si occupano di tutti, non solo di poveri. Quindi la domanda è del linguaggio, il linguaggio che si usa per concettualizzare appunto l'impresa sociale o l'imprenditoria sociale, se costituisce un freno alla lobbying.
Grazie. Did you get that? I'm hoping you got that. Did you understand the question? Good? Okay, great. So you can, again, pick and choose. I didn't understand the question because I couldn't get my headset on, but someone is going to come and tell me what the question was. But Sophie, did you have any response to those last three remarks?
Yes. So on the government, so I do think, I think governments should do things. I think in a developing country, so if you take Ghana as an instance, then the ability of the government to raise taxes, including taxes from corporations that operate there, is actually quite important. So we return then to the idea of corporate transparency, where you want to see, so in cocoa, some of the biggest agribusinesses in the world are operating in tax-free zones in Ghana, getting access to discounted cocoa beans, and the profits then are migrating to the American-owned companies. So I do think that for governments to serve their populations, they need to be able to raise taxes. I think the last question, I'm not going to answer the middle one because it's about what you taught, so you can answer that one. The last question, was about the idea that social enterprise is just about poor people. Well, I think that the situation in the world is that poor people make up an awful lot of people in the world. So actually, as democratically elected governments, they should be responding to poor people and actually putting more of their money where their mouth is to do with poor people. But also, social enterprises aren't only about poor people. They're also about other people who have not got access, who might not necessarily be poor, and also about the environment. And so there is a lot of urgent things that need to be addressed. And I do think you shouldn't get too stuck on definitions, because actually you'll know when it's a social enterprise. I get the reason if you're going to do tax incentives and things that you have to have a definition. But I mean, in normal circumstances, you wouldn't count Divine as one. But we are, aren't we?
Yes, you are. And finally, Professor Yunus, we're out of time, so if you could be reasonably succinct, that would be wonderful. You will have another opportunity to come and ask questions of Professor Yunus. He is appearing after coffee in the next session, so if you didn't get your opportunity, there will be another option. But the final word to you, Professor?
Getting government off the hook. After all, the government job is to get the job done, whatever the responsibility is given to them. They have many options to get the job done, whether they can do it through their own bureaucracy, whether they can go through the institutions, organizations that people have that can support them so that they can get the job done. So many things like social enterprise, social businesses, these are opportunities for them so that this same thing that they are trying to do through the bureaucracy, they can get done through the organizations and use the creative power of the people, because government bureaucracy isn't known for creative power. It does only repetitive work. But the citizens activist groups can do lots of creative work. So I would say it is helping the government to get the job done in one way. And there are many things government is not doing. It's not in the agenda, it's not in their political program, which is social enterprises, social businesses. They can come and show that this is something can be done. So it's no reason for citizens to sit on their hands and watch the government not doing anything and criticize. That's not a good scenario. For scenario is citizens show that it can be done and shame the government that they are not doing or not doing enough for doing this. So I would say citizens have an enormous role to play in getting things done. On the Brazil thing, yes, of course, we define the courses, all the experience that we have and all the usage of the words and so on. So the students get to know about all the initiatives that are being taken. That last question has been answered. I will use the word social business to simplify, because we define social business by saying non-dividend company to solve human problems. Human problem is not only poverty. It's endless problems. You can use any of these problems to address by social business. For example, the question of drug. It's not about poverty, it's a drug. Old age. It's nothing to do with poverty. Old age is a problem for everybody. How do you handle that? But many things which is not related to, like mentioned that about the environment. This is a common thing. It touches everybody. Waste management, it's a common to everybody. So there are many things which can be done. And technology, how to bring technology into each aspect of our life so that we can solve the problem faster and more solid way. Thank you.
Wonderful. Thank you. I think just in summary, all I want to say really is the scale of the problems we face require profound change. We can't tinker around at the edges and introduce small pieces of legislation that move us on degrees. We need a profound step change in transparency, in regulation and incentives. Governments around the world are responsible for spending more than 40% of all the money in circulation. They too should be buying from social enterprises. Have a good coffee break. We're back in 15 minutes. Your moderator is Professor Jim Shaw from Vanderbilt University, Mohammed Yunus's alma mater. And we've got 5 dynamic young social entrepreneurs. It's time to give the youth their say. See you back here in 15 minutes. Thank you.
Good.